Welcome to Profit Pulse, traders. And before we dive in, make sure you hit that subscribe button because what you're about to hear isn't just another trading video. It's something you can listen to while walking, while driving, or even while falling asleep, because today we're talking about a concept that quietly traps millions of traders every single year, especially in the US. The fantasy of turning a tiny $100 account into $10,000 fast. And we're not going to judge anyone for wanting that. In fact, wanting to transform something small into something big is human nature. But behind that desire is a dangerous kind of math, a psychological trap, a set of expectations that slowly eats away at your discipline, your patience, your logic, and eventually your ability to trade at all. Today, I want to talk to you like a friend, like someone who understands why this dream pulls you in, and why so many smart, capable people end up blowing their accounts chasing this exact idea. Let's start from the moment the thought first hits your mind. Maybe you're scrolling through social media. Maybe you've just watched someone flip a small account into a large one. Maybe you've heard a friend say they turned $200 into $5,000 in a week trading options. Maybe you've been stuck in a job you hate. Maybe your bills are piling up. Maybe you're tired of feeling like your life is running you instead of the other way around. And in that moment, that idea, if I could just turn this $100 into something real, doesn't feel crazy. It feels like hope. It feels like a shortcut to something better. It feels like the fastest exit from a life you're trying to escape. And psychologically, that's powerful. Humans don't chase money. Humans chase emotion, freedom, relief, security, respect, dignity, identity. And when someone sees $10,000 instead of $100, what they're really seeing is a better version of themselves. But here's where the dangerous math starts. Not on the chart, not in the trade, but inside your brain. Because the moment you decide that $100 is going to become something big quickly, you unintentionally create a pressure cooker. You start trading with the outcome already fixed in your mind. You start thinking, this trade needs to win, instead of thinking, this trade just needs to follow my plan. And whenever a trader puts pressure on a trade, the trade stops being a trade and becomes a lottery ticket. It's not deliberate anymore. It's not strategic anymore. It's emotional. It's desperate. And desperation doesn't care about risk. It only cares about result. Think of it like trying to run a marathon by sprinting the first mile. You might feel confident, you might feel strong, you might feel unstoppable, until your legs give out and your lungs start burning. Trading a small account with a big goal is like that. The sprint feels exciting. The idea of fast profit feels intoxicating. And then reality hits. A single loss wipes out 20%, 30%, 40% of your account. Suddenly, your goal of $10,000 feels even further away. And your brain reacts exactly how human brains are wired to react, by insisting you chase the next big win even harder. Here's a simple example that shows how this mindset breaks you down. Imagine you start with $100. You want to grow it fast. So on your first trade, you risk $20. It feels bold, but you think, if I win, I'll jump to $130. You take the trade and you lose. Now you're at $80. Your brain panics because you weren't prepared for this. Suddenly, the gap between $80 and $10,000 feels gigantic. And the panic doesn't tell you to calm down. Panic whispers, risk more, win it back, don't fall behind. So instead of risking $20, you risk $40. And that trade loses too. Now you're at $40. Just like that, in 2 trades, you've lost 60% of your account. But here's the psychological twist. Even now, your brain is still telling you that it's possible. Even now you're thinking, if I could just catch one good move. That's what makes this math so dangerous. It's not the numbers. It's the hope attached to the numbers. Whenever a trader's goal becomes turn X into Y fast, the time frame starts shrinking in their imagination. What should take months begins to feel like it should happen in days. What should be a slow, strategic climb becomes a frantic climb up a cliff with no rope. The mind starts expecting acceleration instead of consistency. You stop caring about the process. You just want the destination. And when you want the destination more than the process, you subconsciously start choosing shortcut. High leverage, low stop-loss discipline, overtrading, revenge trading. You start trading at random times, trading when you're tired, trading when you're emotional, trading when the market is flat, trading even when you know you shouldn't. You tell yourself it's temporary. You tell yourself you'll calm down once you hit $200 or $300 or $500. But the truth is, you won't. Because if the goal is fast money, then your brain will always push you to go faster. And here's something most traders never realize. The moment you tell yourself, I need to grow this account fast, you're no longer competing with the market, you're competing with time. You're fighting the clock. And when a trader fights the clock, the market always wins. Because time is infinite. Your capital isn't. There's also something deeper happening here, something most trading coaches never talk about, the emotional imprint of your first, small account win. Many U.S. traders who fall into this cycle have experienced at least one moment early in their trading life where a small account exploded, maybe from luck, maybe from catching a trending stock, maybe from a crazy options play. That win creates a permanent bias. Your brain remembers the intensity of that moment, the adrenaline, the thrill, the dopamine. And every time you deposit $100 again, you're not trading the market, you're chasing that memory. You're trying to feel that high again. And the human brain doesn't let go of highs easily. But what about the math? How dangerous is the math actually? Let's break it down without charts, without formulas, just simple logic. To turn $100 into $10,000, you need a 100x return. If you tried to do that in one trade, you'd need a completely insane amount of risk. Something that would either wipe you out or win in a lottery-like situation. But let's say you try to do it step by step. If you try to double the account 7 times, because $100 doubled 7 times becomes $12,800. Then after each doubling, your account becomes psychologically heavier. Every single risk starts feeling bigger. Every mistake becomes more expensive. When your $100 becomes $200, your confidence grows. When $200 becomes $400, now you feel like you're on a roll. But at $400, risking $80 suddenly feels scary. At $800, risking $160 feels overwhelming. At $1,600, risking $300 on a single trade feels reckless. The math starts turning on you because your psychology can't keep up with the compounding speed. People think their account size is the problem. But in reality, it's their mind that fails to scale. Here's a real-life example from a trader I once spoke to, someone based in Texas, working a night shift warehouse job. He started with $100, turned it into $1,200 trading options in a single day, and felt like he'd unlocked some hidden code. He skipped his break, he skipped sleep, and he just kept trading. The next day, he turned $1,200 into $2,800. He said it felt like winning at life. He said it felt like the universe was finally rewarding him. 2 days later, he wiped the account. Not because the market turned against him, but because his own expectation made him believe that stopping would be stupid. The dangerous math wasn't what he made. It was what he expected to make next. The truth is, most traders don't blow up because they're bad at trading. They blow up because they're bad at managing expectations. They believe fast results are proof of talent. They believe slow growth means they're doing something wrong. And when slow growth feels wrong, they force fast growth. And that's when everything collapses. Now, pause for a second. Take a deep breath. And ask yourself, why do you want to turn $100 into $10,000 fast? What emotion is attached to it? What's the real reason behind the urgency? Because once you identify the emotion, the math loses its power over you. When you realize that the goal isn't $10,000, the goal is freedom or relief or validation, then you also realize that rushing is the slowest way to get there. We'll dig deeper into this in the next part, but before moving on, I want you to sit with one simple thought. Fast money isn't dangerous because it's impossible. Fast money is dangerous because it changes you. It changes your expectations, your patience, your identity as a trader. Turning $100 into $10,000 isn't the real threat. The real threat is that in trying to do it fast, you quietly stop becoming the kind of trader who can ever get there at all. You know, the interesting thing about this whole flip a small account fast mindset is that most traders don't realize when the shift happens. The shift from trading logically to trading emotionally. It's so subtle that you barely notice it. It starts the moment you attach your self-worth to your account size. The moment you start thinking, if I can grow this quickly, it proves I'm smart, or it proves I'm capable, or it proves I'm finally in control of my life. And the quiet truth is, a lot of traders aren't trading to make money. They're trading to fix how they feel about themselves. And when you trade to fix a feeling, the math of the market becomes secondary. The emotions take over. And the market becomes a mirror reflecting back all the things you've been avoiding. Impatience, insecurity, fear, desperation, pride, ego. There's this pattern I keep seeing in US traders who come from tough financial backgrounds. People juggling 2 jobs, people raising kids alone, people trying to break generational cycles. And when you're in that position, $100 isn't a trading account. It's a lifeline. It's food. It's gas. It's one late bill. It's one emergency. So when you put that money into the market, you're not just trading capital, you're trading the weight of your entire life. The urgency isn't just psychological. It's survival-based. And that creates a kind of tunnel vision where the only future you can see is the one where the account grows fast. Anything slower feels like failure. Anything slower feels like a step backward. And when the pressure is that intense, you don't think like a trader, you think like someone trying to escape. And escape-driven trading is always rushed, always impulsive, always emotional. But let's look at the math again, because math doesn't care about your story. Math has no sympathy. It doesn't know how tired you are. It doesn't know how stressed you are. It doesn't know what you're running from. Math is just math. And here's the brutal part. The human mind is awful at understanding compounding when it's required in small increments. People see 100 to 10,000 and they imagine a straight path. They imagine a few big wins. They imagine a handful of perfect trades. But real compounding, even the dangerous kind, doesn't work like that. Think about this. If your goal is to make a consistent 10% per trade, which for a $100 account is just $10, that sounds tiny. That sounds slow. That sounds like nothing. But 10% repeatedly is one of the most powerful forces in finance. The problem is that the human mind gets bored before the math gets interesting. Because the early numbers feel embarrassing. They feel too small to matter. Nobody brags about making $7 on a trade. Nobody posts screenshots about turning $95 into $104. The world celebrates the big flips, the big risks, the big wins. And that conditioning makes you feel like you're falling behind if you grow slowly. But here's the psychological trap. To get from 100 to 10,000 fast, you need absurd returns. And absurd returns require absurd risk. An absurd risk demands psychological stability that almost no beginner has. It's like asking someone who just learned to swim to cross a lake during a storm. Yes, someone somewhere might survive it. But it's not a strategy. It's luck built on borrowed time. Imagine this scenario. You risk 30% of your account per trade. And you get lucky. And the first trade wins. Then the second. Then the third. Now your account is growing fast. You're doubling every few wins. You start feeling invincible. Your confidence grows. But what also grows, quietly, is the size of your next potential loss. When your account hits $900, a 30% risk isn't $30 anymore, it's $270. And that's the part nobody talks about. Because even if your strategy is the same, even if your method is unchanged, your emotions cannot remain the same. Losing $30 doesn't feel like losing $270. Losing $270 doesn't feel like losing $900. And losing $900 doesn't feel like blowing a $100 account. It feels like losing a week of paycheck. It feels like losing food. It feels like losing opportunity. And the market doesn't adjust itself to your emotions. It just keeps being what it is. This is the moment where traders make their biggest mistake. The bigger the account grows, the tighter they become. They exit early. They hesitate. They panic. They close winners too soon. They widen stop losses. Their decision-making gets distorted in real time. The fear of losing replaces the desire to win. And suddenly, the same aggressive approach that helped them grow now feels impossible to continue. So they start doing something even more dangerous. They start switching between aggressive and conservative behavior at random, depending on how scared or confident they feel at that moment. And that inconsistency destroys them. Here's a story that perfectly captures this. A guy from Florida messaged me once. He said he started with $150, turned it into $7,600 in 6 trading days. Genius-level returns, right? Except he wasn't trading smarter. He was just trading fearlessly because, in his mind, $150 wasn't a big deal. He wasn't scared to lose it. But when the account hit $7,600, suddenly the fear kicked in. He couldn't think clearly anymore. He couldn't take the same setups. He froze when he needed to act. He panicked when he needed to wait. And in 2 trades, he was back at $400. Not because the market punished him, but because his psychology couldn't handle the new size. His brain never adapted to the compounding speed he forced on it. And that's why turning $100 into $10,000 fast is dangerous. The numbers grow faster than the mind can adjust. Let's talk about another psychological element, the illusion of control. Traders believe that if they just try harder, if they watch more charts, if they analyze more setups, they can force consistent gains. But the market doesn't reward effort. It rewards discipline. It rewards patience. It rewards emotional neutrality. But when you're trying to grow fast, neutrality disappears. Every move starts feeling personal. Every red candle feels like a threat. Every green candle feels like permission. And you lose the ability to see the chart for what it is, a probability field. Not a guarantee. Not a source of salvation. Not a place where pressure creates result. Pressure might work in a gym. It might work in a classroom. It might even work in a career. But in the markets, pressure destroys judgment. The more urgently you want results, the more blind you become to the risks required to achieve them. Now let's explore the emotional cost of big expectations. When you set a huge target, like $10,000, your brain starts creating milestones. You tell yourself you need to hit $500 by next week, $1,000 the week after, $3,000 within a month. And the moment you fall behind your imaginary milestones, your brain flips into recovery mode. Every trade becomes a chance to catch up. And catch-up trading is one of the fastest paths to destruction. It's the trader's version of trying to sprint uphill after tripping. You're out of rhythm, out of balance, out of sync with reality. And then comes the cycle, the most dangerous cycle of all. The small account gets blown. You feel embarrassed. You feel frustrated. You feel like you were close. So what do? You deposit another $100. And because you've already tasted what fast growth feels like, the new $100 feels even smaller. So you take even bigger risks than before. You try to repeat the shortcut. And the cycle repeats. Again. And again. And again. Some traders repeat this cycle dozens of times. some for years. Some lose thousands. And the scariest part? They still believe they're one big win away from breaking through. The math is dangerous, but the hope attached to the math is even more dangerous, because hope without structure becomes self-destruction. And yet, here's the strange part, and this is where we'll go deeper in the next part. Even though this path is destructive, it makes complete psychological sense. The human brain is built to seek shortcuts, built to chase big emotional rewards, built to avoid slow, boring consistency, built to fantasize about what life could be, not what it takes to build it. So the dream isn't the problem. The speed is. This is the heart of the dangerous math. When you try to get there fast, you never get there at all. And here's where things get even more interesting, because once you've gone through the cycle enough times, once you've blown a few small accounts, once you've tasted that explosive growth and then felt it slip away, something strange happens inside your mind. You don't quit. Most people think traders blow up, lose money, and walk away. But that's rarely the case. What usually happens is that traders become even more convinced that the fast growth path works, because they've seen it happen before. The only part they blame themselves for is not holding longer, or stopping sooner, or managing emotions. They never question the strategy itself. They question their timing, not their expectations. They believe the shortcut was real. They just failed to use it correctly. And that belief is the exact thing that traps them for months or years. It's the same psychological loop that casinos rely on. You win once, and that win plants a seed so deep in your brain that even after 20 losses, you still think the next win could change everything. Trading a small account with a fast growth mindset isn't trading. It's a casino with extra steps, wrapped in charts and candlesticks so it feels rational. But the emotional patterns underneath are identical. And that's why people don't stop. Because the hope is stronger than the logic. But let's zoom out for a moment. Let's strip away the charts and the risk percentages and the compounding and all of that, and let's talk about the human side. Because the dangerous math doesn't start with numbers. It starts with identity. When someone wants to turn $100 into $10,000 fast, what they're usually saying is, I want to become someone else, and I want it to happen quickly. It's not about the money. It's about who they believe they'll become when the money arrives. Someone respected. Someone admired. Someone who doesn't live paycheck to paycheck. Someone who doesn't feel small or stuck or overlooked. Someone who finally feels like they're winning at life. And that's the part nobody talks about. Turning $100 into $10,000 is an identity fantasy, not a financial plan. And identity fantasies are powerful. They override logic. They override discipline. They override patience. When you're chasing an identity, you stop thinking in probabilities. You start thinking in outcomes. You start thinking, this trade needs to win because my future depends on it. And when a trade holds that much emotional weight, you're no longer participating in the market. You're performing for your own insecurities. Let me give you a real moment many traders in the US go through, especially younger traders in their 20s and 30s. You're sitting alone in your room, staring at your account. Maybe it's late at night. Maybe you're tired from work. Maybe you feel like everyone else your age is doing better in life. They have cars, houses, savings, vacations, stability. And you feel behind. So you look at your $100 account and you imagine it becoming $10,000. And suddenly, in your mind, the gap between your current life and your ideal life feels smaller. Trading becomes the bridge. Risk becomes the ticket. And desperation becomes the engine. This is why the math is so dangerous, because the fantasy blinds you to the probability. Let's talk about probability for a second, but in a human way. Imagine flipping a coin. If you flip a coin 10 times, you might get 7 heads, or 3 heads, or even 10 heads. Anything can happen in a small sample. But flip it 10,000 times, and suddenly the truth reveals itself. It's going to hover around 50-50. Trading with small accounts and big goals is like flipping a coin and expecting 10 heads in a row, not just once, but multiple times. And you might actually get it. That's the problem. The early wins trick you into thinking it's repeatable. But small sample size success is the biggest illusion in trading. It's just probability pretending to be skill. Now let's talk about something deeper: emotional debt. Every time you blow an account while chasing fast results, you create emotional debt. You tell yourself you'll make it back. You tell yourself you'll trade better next time. You tell yourself you'll be more disciplined. But underneath, there's a guilt that grows, a frustration that grows, a sense of failure that grows. And the more emotional debt you carry, the more aggressive you become, because you're not just trying to make money anymore, you're trying to fix what you broke emotionally. And emotional debt is the most expensive debt a trader can carry. Think about a trader who's blown 5 small accounts. They're not trading the market anymore. They're trading their own past. They're trying to erase mistakes. They're trying to prove they can do it. They're trying to rewrite their story. And when you trade emotionally like that, you take risks that make no sense. You convince yourself that one big win will make everything right again. And when you start trading with the intention to erase the past ends up repeating itself. Now, I want to share something that I've observed again and again, especially among US retail traders trying to flip small accounts. When they finally do manage to grow an account, maybe from $100 to $500 or $500 to $1,000, something surprising happens. They don't become more careful. They become more reckless. The reason? Validation. The win validates the fantasy. The win convinces them that they were right all along, that fast growth is possible, that maybe they really are different, maybe they really are talented, maybe they really can pull off what most people can't. But validation can be dangerous, because it creates overconfidence. It creates entitlement. It makes you feel like the market owes you continued success. And entitlement in trading is poison. It makes you think you can break rules and get away with it. It makes you think risk management applies to everyone except you. It makes you forget that the market doesn't remember your wins. It only punishes your mistakes. Here's a psychological twist most traders never notice. When your account grows quickly, your expectations grow even faster. Maybe your goal was $1,000. But when you hit $300, you start thinking about $2,000. When you hit $600, you start thinking about $5,000. When you hit $900, you start imagining $10,000. Your mind keeps moving the finish line. So even when you're winning, you feel like you're behind. Even when you're making progress, you feel like it's not enough. And feeling behind while winning creates a dangerous internal conflict. You start trading aggressively not because you're losing, but because you believe you're not winning fast enough. That mindset destroys accounts faster than any strategy ever could. There's also something about small accounts that triggers emotional attachment. Humans naturally value what they earn more than what they find. So when you grow a small account with your own trades, it feels personal. It feels meaningful. It feels like your creation. But the more attached you become to the account, the harder it becomes to take logical risk. You start protecting the money instead of growing it. And that protection instinct shows up as hesitation. And hesitation shows up as poor decision-making. You close winners early. You avoid good trades because you're scared to lose. You break your own rules in the name of safety. And ironically, trying too hard to protect your gains becomes the reason you lose them. Now here's where the math becomes psychological cruelty. The faster you grow the account, the more each dollar emotionally means to you. And the more it means to you, the more likely you are to make mistakes. It's like climbing a ladder that gets shakier the higher you go. The steps feel the same, but your fear doesn't. And fear always wins in trading. Fear shrinks your vision. Fear makes you reactive. Fear makes you think in minutes instead of months. Fear makes you forget the bigger picture. And when fear becomes your trading partner, the outcome is always the same. You eventually slip. But let's talk about something even more subtle, something traders never realize until it's too late. Your brain gets addicted to volatility. When you trade a small account aggressively, your emotional spikes, both positive and negative, become intense. You feel alive when the trade moves quickly. You feel adrenaline. You feel excitement. And over time, your brain starts associating fast moves with progress. So when you try to switch to slower, more stable trading later, you feel bored. You feel like nothing is happening. You feel like you're not really trading. And this boredom pushes you back into high-risk setup. Not because they're logical, but because they're emotionally stimulating. This emotional addiction is one of the quietest and deadliest parts of the dangerous math. You train your brain to crave volatility, and once it craves it, it becomes almost impossible to go back to slow, rational trading. Your brain doesn't want safe trades. It wants exciting trades. It wants dramatic candles. It wants big swings. And when your brain wants excitement, your account eventually pays the price. But the biggest danger of all, the one that affects almost every trader chasing fast growth, is the illusion of inevitability. When you imagine turning $100 into $10,000, you don't imagine the journey, you imagine the destination. And when your mind fixates on the destination, the journey becomes something you try to rush through. But in trading, the journey is the skill. The journey is the process. The journey is the transformation. The journey is the part that shapes who you become. And when you rush the journey, you sabotage your own development. This is the painful truth. Most traders fail not because they're incapable, but because they never give themselves the time required to become capable. This whole fast-grow mindset steals your patience. It steals your ability to think long-term. It steals your ability to walk away. It steals your ability to stay neutral. And once those psychological tools are gone, it doesn't matter how much knowledge you have, because trading isn't a knowledge game. It's an emotional game. And the fastest way to lose an emotional game is to rush it. In the next part, we'll go even deeper into how this mindset changes your perception of risk, how it reshapes your internal dialogue, and how it eventually alters your relationship with money itself. And when you walk into part 4 of this journey, something in you already knows the truth. The numbers, the charts, the probabilities, the hope, the fear, the frustration, the guilt, the optimism, they're not separate things. They all hit the same spot in the human brain, and that's why people don't quit even when they lose, and that's why people sabotage themselves even when they win. This part of the story isn't about the hustle or the grind or the math. This part is about the invisible forces that pull traders like gravity, about the emotions that shape their decisions before they even touch the keyboard, about the patterns that are repeating not because the strategy is bad, but because the mind running the strategy is exhausted, overwhelmed, or convinced that it has to do everything fast or not at all. And if you think that this doesn't apply to you, just pause for a moment and listen closely to the way your body reacts when you hear phrases like, "You could have made more," "You left money on the table," "You wasted the opportunity," "You hesitated," "You moved too slow," "You should have held a little longer," "You should have exited earlier," "You messed up." Because every trader in the US who starts with a small account has been trained, by influencers, by social media, by advertisements, by online pressure, to believe that they're behind. Not behind their goals, but behind someone else's timeline. And nothing destroys a trader faster than the belief that they're late. Part 4 starts in the exact emotional space where the real turning point happens for small account traders. It's the moment when they stop asking, "How do I grow this fast?" and start asking, "Why am I creating pressure that doesn't even belong to me?" You can see this play out in real time if you've ever watched a trader sit in front of their screen after a losing day. Their body posture changes before their strategy does. Their breathing shortens. Their shoulders rise. Their jaw tightens. Their eyes start scanning the charts in a way that's more desperate and less analytical. Every small movement of the candle feels like a personal attack. And what they think in that moment isn't, "I should wait for my setup." What they think is, I need to fix this. And that one sentence, those 5 words, are responsible for more small account destruction than any bad strategy in the world. Because when a trader tries to fix something emotionally, they stop trading the chart and start trading their pain. When they feel like they need to fix something now, immediately, urgently, their mind collapses the timeline of the entire day into the next 5 seconds, and suddenly every candle feels like the last chance to change the outcome. If you've ever wondered why someone with a safe, sensible plan suddenly abandons it in the middle of the day, this is the reason. Pressure. Not charts. Not indicators. Pressure. The invisible pressure of wanting to become the future version of yourself faster than reality allows. And this pressure doesn't come from greed the way people think. Greed is loud and obvious. Pressure is quiet, subtle, internal, and disguised as responsibility. It whispers things like, you need this win, you have to make up for yesterday, you need to prove you can do it. And most people never realize that they're not trading price action, they're trading expectations. But somewhere in the middle of that emotional storm, something else happens, something that only a few traders ever notice. The mind, when pushed to its emotional limit, tries to create shortcuts. And these shortcuts show up as impulses that feel like intuition but are really survival instincts. For example, when a trader wants to enter a trade earlier than their setup requires, the mind convinces them that they're being proactive. When they hold a losing trade longer than they should, the mind convinces them that they're being patient. When they double their position size after a loss, the mind convinces them that they're being aggressive in a smart way. These aren't conscious choices. These are the brain's attempts to escape discomfort. And the scariest part is that sometimes these emotional decisions randomly work, which tricks the trader into believing the emotional path might be the right one. But randomness is the cruelest teacher in the market because it rewards the wrong behavior and punishes the right behavior just often enough to confuse you. Part 4 is the part of the journey where traders start to see that their biggest losses weren't caused by lack of knowledge, but by lack of emotional management. It's the part where they realize that they were never fighting the market, they were fighting their own reactions. And this becomes obvious when you compare 2 traders with the exact same strategy. One grows slowly but consistently. The other blows up every 2 weeks. Same chart, same entry, same exit rules, same timing. So why the difference? Because the second trader is mentally trading not just what's on the screen but everything that's on their shoulders. Bills, goals, expectations, fear of failure, fear of missing out, fear of being wrong, fear of disappointing themselves. It's not the trade they're reacting to, it's their entire internal world pressing against a single candle. And at some point, usually after enough emotional exhaustion, the trader sits back, looks at the screen, and experiences a strange moment of clarity. It doesn't happen with music or motivational speech or a dramatic realization. It happens quietly. The trader looks at the chart and thinks, I'm not losing because I'm inexperienced. I'm losing because I'm rushing. And that moment is the psychological shift that marks the beginning of true growth. It's not when they finally understand a strategy. It's when they finally understand their own mind. But part 4 doesn't end there. Because growth isn't a peaceful, clean process. Growth is messy. It's full of back and forth. It's full of days when you follow all the rules and still lose and wonder if the discipline was worth it. It's full of days when you hesitate on the perfect setup because the last loss shook your confidence. It's full of days when you size down not because it's smart but because you're scared. It's full of days when the old impulsive version of you tries to break through the door. And this is the part of the journey where traders often feel stuck, because they're doing the right things but the results haven't caught up yet. They're being disciplined but not rewarded. They're being patient but not profitable. And this delay creates frustration that feels worse than losing money. Why? Because humans are built to expect immediate emotional feedback. When you work hard, you want proof. When you sacrifice, you want results. When you push yourself, you want the world to respond. But markets don't work that way. Markets operate on delayed reciprocity. They reward discipline over time, not immediately. And this delay crushes the ego. This delay is where most traders quit, not because they couldn't succeed but because they couldn't emotionally survive the waiting period. And then something else happens, something even more important. The trader starts to separate identity from outcome. They stop saying, "I'm losing," and start saying, "the trade lost." They stop saying, "I'm a bad trader," and start saying, "that setup didn't work." They stop saying, "I shouldn't have tried," and start saying, "I should stick to my process." This linguistic shift is the psychological equivalent of taking the weight off your chest. It doesn't make things easier, but it makes them clearer. And when trading becomes clear, decisions become cleaner. And when decisions become cleaner, outcomes eventually follow. This is the emotional architecture of every small account that grows the right way. Not fast, not magically, not through forced discipline, but through understanding how the mind sabotages itself and learning how to unsabotage it at the exact moment it matters most. Part 4 is the battle inside the trader, and most people never talk about it because it doesn't look glamorous. It doesn't look like winning streaks. It doesn't look like big profits. It looks like quiet resilience. It looks like learning to breathe. It looks like choosing not to react. It looks like closing the platform when your mind is emotional. It looks like the kind of wisdom that nobody clicks on in a thumbnail but everyone needs in real life. And by the time you reach the end of this part, you start to understand something profound. The market doesn't reward intelligence. It rewards emotional maturity. Not knowledge, but stability. Not brilliance, but consistency. Not aggression, but balance. And the trader who learns this becomes a different person, not just on the charts but in every part of their life. And when you step into part 5, something in the air feels different, like you've crossed a point where you can't go back to the old version of yourself even if you tried. Because at this stage, you're not just a trader trying to grow a small account, you're someone who has spent long enough in the fire to understand what the fire is doing to you. And you start noticing things you never noticed before. You start realizing that the market isn't testing your strategy, it's testing your patience. It's not evaluating your intelligence, it's evaluating your emotional tolerance. It's not punishing your mistakes, it's punishing your urgency. And as strange as it sounds, the market becomes a mirror, reflecting back everything inside you. Every fear, every impulse, every insecurity, every unresolved expectation, every belief you carry about money, success, and what you think you deserve. This part begins at the exact moment when a trader stops chasing the big win they think will change their life and starts respecting the small win that changes their behavior. And that's what people rarely understand. The breakthrough in trading isn't when your account suddenly jumps from $100 to $500 to $1,000. The breakthrough is the moment when you stop needing it to jump. The breakthrough is the moment when a $15 win feels complete because you executed perfectly. The breakthrough is when a $7 loss doesn't insult your identity. The breakthrough is when your sense of self-worth isn't tied to your P&L for the day. And once you reach that point, something inside you expands quietly, confidently, without applause, without dopamine, without stress. And this new emotional space becomes the place where good decisions finally begin. Part 5 is where traders begin to understand the difference between pressure and momentum. Pressure is what comes from forcing things. Momentum is what comes from consistency. And most traders never develop momentum because they're too busy manufacturing pressure. You see them grinding every day, staring at the charts for hours, taking trades they shouldn't, and calling it hustle, but really it's anxiety in disguise. And the irony is that momentum needs the exact opposite of pressure. Momentum needs space. Momentum needs clarity. Momentum needs the absence of noise. Momentum grows in the days when you do nothing wrong, not in the days when you try to do everything right. And at some point, a trader realizes that success isn't about intensity, it's about sustainability. Because you can trade intensely for a day, a week, maybe a month if you're stubborn, but you can only trade sustainably for years if your emotional lifestyle fits your trading style. And this is one of the biggest reasons why people who finally start winning end up losing it all. They keep the old emotional lifestyle while trying to run a new disciplined strategy, and the two don't match. It's like trying to pour clean water into a dirty container. The water doesn't purify the container. The container contaminates the water. And the moment you realize that your trading results are just a reflection of your emotional container, you finally understand why the market keeps giving you the same lessons over and over again. This is the part where the trader starts rewiring their emotional habits without even knowing it. They start walking away from the screen when they feel a spike of adrenaline instead of jumping into a trade. They start checking their breathing before checking the chart. They start respecting their stop-loss as a boundary, not a punishment. They start taking profit without feeling the need to squeeze every last cent out of the move. They start holding themselves accountable in a softer, healthier way. And this subtle shift creates a kind of internal architecture that finally supports growth instead of sabotaging it. And now something strange begins to happen. It's so subtle that most people don't notice it at first. The trader begins to feel lighter. Not lighter because the wins are bigger, but lighter because the burden is smaller. They stop waking up with trading anxiety. They stop tying their identity to every decision. They stop feeling like the market owes them something. And when this mental weight disappears, the market suddenly stops feeling like a battlefield and starts feeling like a workplace. Not a place for war, but a place for work. A place where you show up, do your job, follow your system, manage your risk, take your setups, protect your capital, and know that your future doesn't depend on today's outcome but on your long-term behavior. And that's when traders experience something almost spiritual: neutrality. True emotional neutrality. The ability to look at a chart and not feel anything. Not fear, not greed, not excitement, not pressure, just presence. And when a trader reaches that level, their strategy finally becomes what it was always meant to be: a system running on clarity instead of chaos. That's when trading becomes less about reacting and more about observing. Less about hoping and more about understanding. Less about forcing and more about flowing. And people think that this part of the journey requires enlightenment or some deep, meditative discipline, but really it just requires exhaustion. Exhaustion from the emotional chaos, exhaustion from the overthinking, exhaustion from trying to speedrun an experience that was never meant to be rushed. And here's something every trader eventually realizes in Part 5. The market doesn't reward speed. It rewards endurance. Not the endurance to stay in a trade longer, but the endurance to stay in the game longer. The endurance to keep learning without breaking. The endurance to stay disciplined without burning out. The endurance to grow without forcing it. And once this endurance becomes part of your identity, something incredible starts happening to your account. Not explosively, not magically, not dramatically, but steadily. Steady like a heartbeat. Steady like progress that doesn't need validation. Steady like a future that isn't built on big wins but on small habit. And then, without even realizing it, the trader becomes someone new. Someone calm. Someone intentional. Someone capable. Someone trustworthy to themselves. Someone who doesn't need the market to make them feel successful because they already feel stable inside. Someone who trades not to escape their life but to build it. Someone who understands that the real transformation wasn't the money they made, it was the person they became. And that's where the journey reaches its quiet, powerful truth. Not a lesson, not a moral, not a rule, just a truth that every trader eventually discovers on their own, that growing a small account is not a financial challenge, it's an emotional evolution. And once you evolve, your account follows. Not because the market becomes easier, but because you become harder to break. And if you've made it this far, if you've listened to every part, if you've absorbed every emotional shift, then you're no longer the person who started this series. You're someone who has walked through every internal shadow, every fear, every belief, every pressure, every expectation, every setback, every insight, and come out with a deeper, clearer understanding of yourself. You didn't just learn how to grow an account. You learned how to grow a mindset that can handle wealth. And if you want more content like this, make sure you hit that subscribe button, share this with someone who needs to hear it, and stay tuned, because this journey is only getting started.